RJTI charged versus glitter isn't always good, but do you want to hear us again? The first time we started warning from June to December 2024 about what was coming around the corner for PLTR, NVDA, Apple, DJ30, SP500, NASDAQ, and many more. We were seen as uninformed and unattached to what the earnings report, etc., were offering as good signs that the markets were to continue to climb higher in 2025. When we depicted where the top turnaround levels were to be, most laughed and said no one could determine where things would unfold. Yet, what happened is that all of the financial reporting about the markets crashing, the scurrying to make sense out of the strong decline just witnessed, the cause for recession, NVIDIA trading under $100 a share when we told you that such was going to happen at the time that NVIDIA was trading at $144 a share, and most Wall Street gurus had no clue and wasn't even considering NVIDIA trading under $100 a share. We told you PLTR to head towards $65 and why it was foolish to buy PLTR at $116 a share or higher. And afterwards, PLTR came within $1.12 of our $65 a share target. And it's a fact we told you well before it unfolded. On November the 7th, 2024, we sent out, our algorithms are stating that it is absolutely impossible that the markets will not give back some of its gains, and it could be a mild to a severe downturn. Mild equaling 2,000 to 3,000 points Dow, severe equaling 8,000 to 12,000 points Dow pullback. There's also a strong case that you will not see the normalization of lower treasury yields until the end of year 2026, unless we get our flight to quality from what lies around the corner. As you can look at this S&P 500 chart, you can see that our sell signal came in at 6,134.50. Now, our Tesla sell signal at $451 a share, and Tesla slid to $214.25 thus far. And might we add, Elon Musk wasn't even playing around with Dodge, and President Trump hadn't even entered the words tariffs, simply because he wasn't even in office at the time we got our sell signal. Mike Wilson, chief strategist for Morgan Stanley, had called for a bottom at 5,500 for the Standard & Poor's 500. We told you he was wrong, that it was not the bottom. And the S&P 500 hit one of our lower targets we told you was to trade 9 months ago, around 4,800 level. Goldman Sachs called for a recession in year 2025, but we told you March 2024, a little bit of a year ago, that a recession was on the table. Our forecast that the DJ30 was to trade 10,000 points lower, in addition to the fact we picked a high turnaround point for the selling area. And here's the Dow. You can see 12,524 and 12,62024. The Dow was trading near the 45,000 contract highs. And we did it for the NASDAQ too. As you can see on this chart, our sell signal came in at 22,000 132.71, not too far off of the all-time contract highs. Our forecast 9 months ago that the VIX would retest last year's highs. As you can look at the chart of the VIX, in 2024, we ran up to 30. In 2025, we ran up to 30, if not a little bit higher. Our goal forecast from 2016 to 2017 to hit $2,500 to $3,100 an ounce versus, at that time, Goldman Sachs, who was lackluster or neutral in 2017, and then they come out with a projection in 2024, 2025, that goal was to trade higher. Wow, we upgraded our target to 3,300 to 3,500. As you can see on the gold chart here, before JP Morgan, Goldman Sachs, Diane Swank, Art Cash, and Guggenheim, BlackRock, Vanguard, Jim Cramer, Citibank, Bank of New York, CNBC, Smarty Pants, Rick Santelli, Omega, Jeffrey Gundlach. Our buy signal for gold was well before they smelled the coffee. What is the common denominator? Answer. We told you before things became today's reality. Can you imagine the potential financial rewards one could have raked in from any one of our sell signals if you had just bought a put option? And now, let us again reiterate another similar declaration, which is that you must not get caught up in the glitter that the markets are setting up for to illuminate. Even if the S&P 500 traded up to 5650 or even higher, if President Trump doesn't do a reversal on tariffs, you might as well get used to down. And there are 2 other, if not 4 other issues that lie at the door to sock the indexes lower. And they are 1, a black swan. 2, real estate index. 3, the banking index, global and regional. Another pop in the VIX after a little retreat that should push trade level up to 60 to the 90 point range. Yikes. You see, the laws of physics are superior and the laws of mathematics are definitive. But fundamental analysis is a 50-50 potential outcome. And although it is true one can successfully trade off of fundamentals, it remains the subset of physics and mathematics. Our system is built to see what the potentials are for the tomorrow based off of certain algorithmic positions. And it is an anticipation of events that we look to be. When our algorithms reflect a certain posture, simply implies that because of physics' gravitational forces, a market either has to rise or fall in order to correct the extremities that exist. And once the event has taken place or is taking place, the reasons of justifications come to explain the why. What you saw in 2025 so far is not a lot of people telling you, hey, listen, we told you to sell. You see a lot of the gurus saying, well, because of this, or you see the financial media saying, well, because of that. But what they didn't do is say 3 to 9 months ago that the market was going to move down. We didn't know the reason why, but our posturing of our algorithms told us that an event had to come to push the markets back down. Turns out it's the uttering of Mr. Trump's tariffs. But although President Trump sparked the downturn, Our forecast came strictly from our discipline to follow what we know has, over the last 120 years, supported our patterns, where such gravitational forces would work as they have done in the past, and it is time, whether it is a short, mid, or long duration, would bring such about. This is why our forecast commenced in March of 2024 that the markets had to retreat, but time had to bring it about. For example, take a look at when we knew a market was to rise. When you look at this chart here, I want you to focus in on the light blue line there that's in the box. We watch as our algorithm dives below, our red line, and at some point it became oversold. Well, our system says in this instance, comparing to other levels that we've seen before with blue diving down, we knew that, hey, the market had to correct itself from these oversold conditions, because the blue line under the red had to cross back up, because it's always done that over the last 120 years. For example, take a look at when we knew that a market was to fall. And this is what has brought about year 2025 decline. If you notice, focus in on the light blue line again. As you can see, before 2024, we start seeing a rise in the blue line. And for the whole year of 2024, the blue line stayed above the red line. But we're registering, that, hey, listen, because the blue line always has to cross the red, we're going to warn that the market has to come down. And as you can see, that in 2025, that's exactly what happened. Blue crossed below red. But all along, we knew that there had to be some selling pressure. So, year 2025 is not a shock to us, but something that we expected to unfold from 6 to 9 months ago. And frankly speaking, prophecy became reality. Now, the rally off of the SP 500, 4800 level, we see it as a relief rally based from our algorithms. And yet, the laws of physics and the laws of mathematics remain fully intact on our longer-term charts. And until such changes, then, just like we suggested to you to sell rallies for some profit taking in October and November of 2024, and January and February of 2025, we are holding true to this. But the wild card is whether President Trump pedals backwards to detour or to stall the call of physics. And yet, our algorithms say that even then, the downside numbers below are to be a directional attempt because of physics superiority. Our downside targets are Standard & Poor's 500, 4,000 to 4,400, DJ30, 29,000 to 34,540, NASDAQ, 12,000 to 15,000, gold, 3,300 to 3,500, treasury yields, 2.34 to 3.35 yield. And we're basing it off of a flight to quality more so than the FOMC coming in to cut interest rates. Okay. Now, time shall reveal again our projections. Walking through the desert for days without water can cause one to see illusions. but the truth of the eyes may not hold the truth of life at that time. So in regards to the markets, this higher move is possibly illusionary. It's easy to see the trees that make up the forest, and it's even easier to see the forest that's made up of trees, but it's not so easy to see behind the forest. Get your Rambo today. RJTICHARTS.com, driven by infinite wisdom and its proprietary trading systems.